Hello everyone, and yeah, so thank you for joining me for my first webinar with FX Street. Very happy that you've all taken your time to come and join me here. The subject I would like to talk to you guys about today is Europe at risk of Japanification? Now, right now, the European debt crisis is having a bit of a lull. Not much is happening, so I think this is a good opportunity to really examine a lot of the claims which are put about that you see in the media quite a lot. It's a very big subject, so I'm going to try to stay away from going into too much depth. I want to just mainly look at the definitions that you'll hear thrown about. If we go to the first slide, so if you look in a Google search, you'll see the phrases Japanification in Europe are thrown about quite a lot. A lot of the banks report about this so-called syndrome which could be happening to Europe. It's grown in popularity since 2010 when the debt crisis started, and they probably will come about again because I think the European debt crisis is far from resolved, and I think Italy might be in trouble within the next 6 months, and it's something which you're probably going to see a lot more in the media again. So if we look, Google, it brings up over 21,000 articles or searches which respond to these keywords. Now, my personal belief is that these are more political kind of claims, and it's more to do with the austerity being implemented in the Eurozone. But ultimately, I'm not trying to put forward a theory. I'm just trying to give you a bit of history about the subject so you can make up your own minds. I just would rather you have the complete story rather than just seeing a snapshot reaction. Okay, so the first question is, what is Japanification? Within a general context, Japanification means the desire to assimilate with Japanese society. Within a financial context, it relates to the spiral of deflation and economic stagnation, which followed the Japanese asset bubble crash of the 1980s and late 1980s and early 1990s. It was such a unique situation that it led to economists coming up with the phrase Japanification. So I'm going to try and condense 1,000 years of history into a couple of sentences, so bear with me here. First of all, you had Japan, which was a feudal society dominated by warlords. It moved into an imperial society, which was inspired by Western industrialization. It became a military power by the end of World War I, fell out with the Western powers. Then the Wall Street crash happened, brought in the ultra-nationalists who made an alliance with Nazi Germany. That ended in defeat. Japan was militarily occupied by the US and reconstructed by the US, and because they didn't need to fund the military, they put all of their focus into industrialization and developing their economy, which is why in the post-war years Japan was known as the economic miracle. So we had a situation where by 1978 Japan was the second largest economy in the world. But that story didn't last for much longer. You saw a massive explosion of growth which came, and Japan had a crash which became known as Japan's lost decade. Now, the roots of this can be found in 1985. The roots of this can be found in 1985, where the Plaza Accord, which was aimed at depreciating the dollar against the yen and the Deutschmark. The direct effect this had on Japan was to affect their exporters and causing GDP to halt. The response by the BOJ was to launch massive stimulus measures. From that point onwards, you saw loose monetary policy, deregulation, and speculative hysteria, which caused the economy to overheat. In response to the overheating economy, the BOJ raised rates in the 1980s, which caused the bubble to burst spectacularly, and rather than react to this situation, they held rates at an elevated level till the mid-1990s. You saw stagflation come in, which was preceded by which preceded deflation from the withdrawal of credit supply, which led to further depressed economic conditions. Consumers lost faith, started hoarding savings, and then you have the deflationary spiral, which really takes off. The government bailout only came in 1999, but banks kept on holding back money and using funding to keep zombie companies going to stop mass unemployment. Japan started to tentatively recover until the 2008 recession, and then the 2011 earthquake and tsunami. Now, just to let you know what the current situation is, you've got Abenomics, which has come in, and this is from Prime Minister Abe. Abenomics is economic policy. There are three arrows: QE, which is the main focus of it, fiscal reform as well at home, and nationalism. So I'm sure you've all seen the islands conflict with China, which is threatened to escalate into war. Many people are saying this is the last throw of the dice. This is a step ahead of where we need to go, but I think it's just good to cover it just for good form. So, moving to the European Union. If we look at the roots of the European Union, first of all, most people will say to you, okay, the European Union is a modern project. It came in the aftermath of the Second World War. I personally say you need to look a bit further back. In 1822, you have the Council of Europe, which was formed in the response to the defeat of Napoleon in 1815. The victorious powers of the war, Prussia, Austria, and Russia, joined. Their aim was to push back liberalism and preserve Christian social values and monarchism. Only the UK abstained, which, when you look at the current European situation, is not too dissimilar. The problem with the Council of Europe was problems emerged within the group, and they fell out, disbanded, and formed their own alliances, which were known as the Entente alliances, which, as you know from your history books, led to World War I, which had the consequential effect of leading to World War II. So there is history here, which is maybe something which we all need to keep an eye on in the future as the crisis expands, if it expands. Okay, so here I've made a timeline which just gives you a rundown of everything which has happened in the actual history of the European Union coming together. You can see at the very beginning you've got the Hague Conference, the European Coal and Steel Community, because the roots of the main idea of the European project was that if economies were intertwined, people won't want to go to war because it will self-harm themselves. The key one for me in 1993, after the fall of the Berlin Wall, was the Maastricht Treaty. Now this was again another mass generalization, but just to keep things moving. This rule was like the prerequisite before the euro was introduced, and it aimed at establishing financial rules, financial discipline for all the members. It was to limit the amount of debt people can take on, and it actually had not subconscious, but the hidden kind of agenda of reforming the periphery nations which were joining to kind of conform to the standards of the core north. So in 1999, you have the euro introduced in 11 countries. In 2002, the notes and coins arrived. Further, other countries joined. The countries which the Maastricht Treaty were really aimed at, to make sure that when they joined the project, they were on board with everything. Now, if we look a bit further on, you can see further consolidation measures of the Lisbon Treaty, but then 2008 was when the show really started, when Lehman's collapsed. This led to it's essentially like, you know, the tide goes out and all the skinny dippers are exposed, as Warren Buffett would say. And from this point onwards, this is where you really started to see pressure put on the European nations. As you can see at the bottom of the chart here, you've got the Greek bailout, OMTs, the Cyprus bailout or in. Okay, so when we really examine what caused the crisis, in a nutshell, if you were to go and read up on it, you might find out that having the euro made it possible for nations to borrow at close to German interest rates. If you look pre-1993 at Greek interest rates, you're talking about plus 20% for a 10-year bond. After 1993, with the Maastricht Treaty, everything pushed back lower. Everything pushed lower, and then when the euro was introduced and Greece was part of it, they were borrowing just a few basis points above German interest rates. This is true. Okay. Also, because of this influx of low interest rates, the periphery states who were kind of bound by who signed up to the Maastricht Treaty, they gave up on economic reform and started to borrow heavily. This caused bloated public sectors and real estate speculation. This is also a true factor as well. You got the Maastricht Treaty, which was really imposed by the core, France and Germany, and it was to make sure that the other nations didn't come in and behave as they supposedly have. But the problem was that France and Germany actually violated the laws themselves. So from the very offset, you've got the core implementers. They're going out there and they are just disregarding the rules, setting a bad example. And this kind of practice developed into something a bit more nefarious, where you've got countries like Greece using off-balance derivatives to hide their actual borrowings. In essence, periphery Europe who we must remember were borrowing at really elevated rates prior to the Maastricht Treaty, and Europe, they had a decade of unchecked stimulus. Now, you could look back now and you could say austerity does look like an attempt to retrospectively enforce the reform that Maastricht had hoped to instigate. This is one way of looking at the crisis, and it's a very clean cut, and it's a very kind of a perfect answer. If you had to answer a question very concisely, this could be it. But there are other questions which need to be asked, because everything seems a little bit too perfect. There were a lot of warning signs for Europe prior to this. If you look at Black Wednesday in the UK, I'm sure all of you know George Soros, very, very famous speculator. He's known around the world for his financial trading. Now he was a man who was billed as the man who beat the Bank of England, and this really came about because of the exchange rate mechanism, the ERM, where the UK found that it was incompatible to stay within a currency, foreign exchange rate mechanism with Germany, mainly because the economies are diverse, and if the UK and Germany can't match within a mechanism of that sort, there's big question marks which have to be asked when you come to countries like Greece or the periphery states like Ireland, Spain, and whatnot. Now, interestingly, in the UK, the subject of Europe actually tore apart the Conservative government and left it in disarray, with half of the government wanting to be more pro-European and proactively engaging with Europe. The other half, for a long time, they were the much ridiculed like fortune tellers saying, the interest rate policy is going to lead to this situation we have now. So after that point, we had almost a decade of Labour controlling the UK government. Now, this is a side issue, but I'm just giving you an idea of how prominent the protests were. If this is not something which just happened overnight. Now, moving on to the next point. Previously, now, if the markets wanted to kind of make an objection or praise a government, they could do it via currency speculation. If you really protest with the way a government conducts itself, you could short a currency, or because in the past previously currencies were used by politicians as like a benchmark. You know, if they were doing well, they could say, look at us, our currency is very strong. Now, this is a bit of a problem because it actually leads to imbalances in the currency, in the economy itself. But in the post-war period, this is how things were handled by European politicians. So, once you take away the currency speculation aspect, what's left? How can speculators voice their concerns? It leads to bond speculation. Now, currency speculation is one thing. Currencies can be devalued. There's many different measures which people can take, but bond speculation, which really cuts to the heart of how governments and countries are funded. It's they're basically taking away the security buffers, and if you're going to have inefficiencies within like a unified zone like the Eurozone, they've left like the European project left individual currencies open to attack. Again, we covered the interest rate policy effectively with the in the Eurozone. With the Euro, it meant that everyone was trading at being able to borrow at German interest rates. This was well known and documented. And again, we have the failure of the court to lead by example. They set rules and they didn't follow them, and it gave the all clear to the periphery nations to break the rules a lot worse. Also, a final point, the history of mismanagement and default in the periphery. Just picking out Greece for an example, I think if you go back maybe 100 or 200 years, I think Greece is either between 3 or 5 times that they've defaulted on their debt. So their current behaviour is not unknown. This was not, the way the situation is presented. If you listen to President Barroso now, he'll get up and he'll say this is an exported crisis from America. This is because of the big banks. They've behaved this way, and he's suddenly exposed all the governments who are behaving well. This is not the case. All I'm trying to do in this with this slide is kind of convey that these were all well-known and documented issues with the euro well before it was launched. So if we were to skip back to the past slide and look at the textbook fairyland explanation of the crisis, and then we build in the factors here, it leads to two conclusions really. I think the first would be either these guys are incredibly stupid, I don't think that's the case, or there's another agenda here. And the other agenda kind of ties in with the second point about the elimination of currency speculation leading to bond speculation, because you hear now a lot of talk about euro bonds. Countries putting pressure on Germany for euro bonds, and Germany is, I think they're interested in the idea because it is the next step. But until they have, because of the election issues, they won't actually take that step just now. Okay, so moving on. So if we compare the Japanese situation to the European situation, you can see both modern economies are the product of post-war reconstruction and restructuring. Now, if we first look at Europe, you can see currency strength was used as a macho way for politicians to demonstrate success, but ultimately it left the economies imbalanced. The introduction of the euro saw effective currency devaluation, low borrowing costs through German interest rates, a decade of stimulus, and an explosion of government borrowing and private sector lending. Now, the debt crisis was instigated by the US subprime crisis, which was external, and gradually the ECB has lowered rates. So if you go back to the Maastricht days, if you look at the individual interest rates that everyone was paying, up until recently when the ECB just cut rates down to 0.5, everything has been lowering and lowering and lowering the whole process. Now, if we go to Japan and we look at the flip side, Japan always had a weak yen policy, and until the 1985 Plaza Accord, which they signed up to, they continued with this process. But because of the after effects where yen dramatically strengthened within a short period, the BOJ launched a massive stimulus measure. Now, the stimulus measure led to the asset bubble, which burst because the BOJ raised rates, as opposed to the ECB, who lowered rates. And they did this to prevent the economy from overheating. And then not only that, they held the rates for almost 5 years. So if you look at, when you're thinking about the question, is Europe at risk of Japanification? When you hear this in the bank reports or you hear this mentioned by your newspaper and columnists, you have to appreciate these are two completely different situations. You have Japan, where this is an individual nation, and through mismanagement they've created this situation. Whereas in Europe, you have a concerted effort to create a superstate. And all of the problems were well known and documented. And through these tactical little inefficiencies, now the agenda, the resolution for Europe is, okay, first of all, we need to have banking union. Now we have to have euro bonds. But if you go back and look, the people of Europe historically did not want to take that step straight away, but they like the idea of the euro. So the euro as a currency unit is more of a political tool than like a financial tool. It's there as the Trojan horse to kind of get people to accept a greater political union. Okay, so the next question I would say is, why do you see these comments in the media, in the financial media and whatnot? First of all, I would say austerity is a shock treatment, so expect shock reactions. Again, I'd like to just comment that I'm not expressing my opinion on austerity or anything. I'm just trying to highlight the greater subject around it, about why it's there, what's caused it. So moving on to the next one, you've got 24-hour news syndrome. Now, everyone needs to have a soundbite here. Now, by making bold comparisons with doomsday scenarios like Japanification, for the analysts that are put up on CNBC or Bloomberg, or they write in the BFT, it looks better than admitting, who knows, or commenting on a bolder political ambition, which until recently has been kind of kept in the realms of more conspiracy theorists, but now slowly it's starting to look like more of a tangible option. And also political partisanism. The European project wants tighter restrictions on big money, so you can expect big money to scrutinise the European project a bit more as well. We've got a contributor here at FX Street, Kenny Polcari. He works for O'Neill Securities, and he's a regular up on CNBC, so if you're ever watching in the US afternoon, you might catch him on there. But in one of his reports yesterday, he made the comment, and I think it's got a lovely overlap with this point here, and he says comments like these create job security, because if you keep them confused, you're the one who ends up in the corner office with the glass windows overlooking Central Park. What I'm saying with this is, don't look for the shock reactions. Just keep in mind everything that we've covered here. People always want to get their name in the paper. Comments like Japanification, I think, it's a mass overgeneralization. I think if we were to go in and look more quantitatively, yeah, there is a case that you could say, okay, well, these factors are at play, but I think that these are more headline-grabbing factors, which we see on the top line a lot. Okay, so the future for the euro. Well, as I've mentioned, my belief is that the aim of the euro was to destabilize European finances, to force through political union, which was previously impossible. Now you hear European politicians talking about creating a superstate to counterbalance the US and China. Now, unlike Japan, who crashed through mismanagement, Europe is flawed by design. There are many examples of protests, people saying, I told you so. It's not particularly helpful, but in Britain at least, there are many politicians who basically had their reputations ruined at the time of the euro, before the euro was introduced. They went off the scene, and now, because of the current situation, people are starting to go back and listen to them. I don't know if you listen to a guy called Nigel Farage. He's a very controversial figure, but I'm not saying I completely agree with him, but he's a very interesting person from this perspective. If you listen to his speeches, it's very clear that the euro and its flaws, its flaws by design are not. It's not something which just happened, you know. Okay, moving on. We've got Europe's decade of austerity, which is predicted. We've had maybe 4 or 5 years now, and you hear people, Wiedemann from the Bundesbank and Merkel saying they expect another 5 years. So it might be a decade of pain for Europe and rebalancing, which there is proactive. You see Europe really trying to go back and to find like long-term sustainable solutions to the inefficiencies which built up before. This is in opposition to Japan's decade of decline, which is more passive. Everything was too little, too late, and not enough. Now, unlike other commentators, personally, I hold a normalcy bias, and I think that while the Union holds together politically, you'll probably see spots likely to range between current multi-year highs and lows. I think that there will be other events, and you'll see explosions of volatility and treacherous trading conditions, but in terms of real breakouts, as long as you see people believing still in the project, the currency will hold together. Another thing which I believe as well, if you read some work by Mark Chandler, he's the global head of currency strategy at Brown Brothers Harriman, and he's a very good commentator to follow. But one point he makes, which I specifically agree with, is that the political commitment to the euro within Europe is vastly underestimated by everyone. You've got politicians, you've got politicians who have put stuff out. Sorry, Fernando, I'll come back to you in a second when I finish this point. You've got politicians who have come out and they've invested their whole careers into the European project. And you've got other central banks who have come in, they fear the chaos. You see lots of central banks from the Middle East coming and buying euro whenever it hits the lows. So I think that as long as that the political belief is there, the euro will stay. Okay, Fernando. Well, you're entitled to your belief. I'm just giving you my perspective. If you want to type in your view, I can maybe answer it. My personal view is that it wasn't, when I say destabilise, I think destabilise is too strong. It's to create an inefficiency which requires a resolution. I think the current situation maybe has got a bit out of hand, a bit larger than they expected, especially when you consider that France. Okay, fair enough. I completely agree. This is a massive subject, and as I said at the beginning, I'm massively overgeneralizing, but from my perspective, I'm trying to kind of just cover the key words, the main points as best as possible. But my personal view is that it was put out there. The aim is to be a currency, but as well it serves a political purpose, and the aim is to have inefficiencies which can be corrected. I think the situation's got a little bit out of control, and eventually now you'll start to see people coming with solutions, greater integration within the European project. and this is a path that will take. I'm quite sure that in a few years' time, Europe will be a consolidated state, hopefully. So in terms of future breakouts, in terms of upside risk, I'd say the doomsday scenario would be that countries start dropping out of the euro. This could lead to a strengthening as the core would be left within. Without the single euro currency, there would be no Europe. Well, the currency has only been here for just over 10 years, and Europe has existed. Well, the European project has been going for 60 or 70 years. So I don't necessarily agree with that, but again, yeah. Just to get back on track. So if countries were to start dropping out of the euro, this could lead to a strengthening of the core would be left within, and the devaluing factors which keep euro at its the devaluing factors would be reduced. Again, Fernando. Yeah, I agree with you that it's a security project, and that's the main point I made at the beginning. You know, when you look back before, you got the concept of Europe, so there is history there as well. But as well, I think it all becomes. I actually agree. I think the economic one is a secondary issue. I'd say it's more political than security, because I think that you're not going to have a situation where you've got Germany marching into Poland because of currency issues. I think those days are past. The events of the Second World War were far too severe, and the German people, they've made it proactively to make a change. I think if you look at the extremity of what happened before, there is a real commitment within Europe and within Germany that extremism is never going to be allowed to really pop up as it did before. This is my personal view. Jumping back onto the upside risks, if you look at Fed tapering talk, it's seen the dollar really appreciate recently, so it's safe to assume that if the equivalent will happen if and when the ECB start to really address the endgame of the European debt crisis. On the downside risks, this is something which we might see before the upside risk. We've got the Fed who have started to talk about tapering, which has seen the dollar strengthen further, combined with the resurrection in the European troubles, which might happen if Italy start to have a few wobbles, which has been commented on. I think it was in the Telegraph this morning. There are analysts talking about Italy perhaps coming into trouble within 6 months. So if we have a combination of the Fed starting to ease back on austerity, the Fed start to ease back on stimulus, coupled with the European issue and further ECB easing measures, I think you could start to see a downside test for the euro. If you look up on an annual chart, you can see there's an uptrend coming from the 1.18 low on Euro USD. I think this uptrend, if we were to break this point, it will only come if there's a geopolitical abandonment of the euro project, because one of the main factors from what I've read and what I've seen is that central bank buying has been a key factor in supporting the euro when it's been at its weakest point. So, in all, that's my wrap. If you have any questions, feel free to drop them in, and we've got a few minutes left. But in terms of my presentation, this is me done. Implications for stocks. I prefer not to answer because it's not something where I can really give like a strong answer on. It's not something I'm prepared for, and stocks are not an area where I claim to really have an understanding. Okay, so can I talk about why the Eurogroup was formed, whose idea, and the reasons why? When you say the Eurogroup, do you mean the European project as a whole, or do you mean the more modern Eurogroup? In terms of the European project, it was formed, as was mentioned by Fernando, it was a security project which started off, it was started off with, I think it's the Coal and Steel Community Act. I have to go and check the name, but yeah, it was on the timeline, which if you want I can send to you as well. It was started in the aftermath of the Second World War. Basically the idea was that if France and Germany and a few other core nations started to combine their industrial areas, then there'll be less incentive for countries to invade. One of the problems that came from the First World War, I think it's Alsace-Lorraine, if I remember correctly, it's a major steel and coal producing area in between France and Germany, And as part of the reparations after the First World War, France took that territory, and when Hitler came to rise, it was one of the first areas that he went for when he started annexing land from all around Europe. So, okay, in the early 2000s, sorry, I'm confused. Okay, so yeah, it was essentially a security project. The idea is that if we all work together, then we have no reason to attack each other. Essentially, go to war. Now, when you're talking about the euro as a currency, maybe this is what you meant, Wiki. In terms of the currency, the idea, my personal view, and I mean, as you've shown in the chat here, you're all entitled to your own view to disagree with me. My personal view is that the end game for Europe is a superpower politically, and the euro is an integral part of it. It plays an economic role, but by launching it first without fiscal monetary union, it's very risky, and it's led to these inefficiencies which were very clearly highlighted from the offset. I think the euro does have a future. I think that Europe is going to really tighten the belt, rightly or wrongly, but I think that countries like Greece and Spain will come through at the other end after rebalancing. There's going to be a lot of pain and maybe a lot of resentment, but as long as the political will, however long that the political will is there, the euro will survive. And once they get through this painful area, then I think the eurozone and the euro has a bright future. Jano, I am located in Barcelona in Spain, but I'm originally from London in the UK. Pan on fire. Okay, I'm not here to offer investment ideas, but I think that as I said before, there's going to be a period of pain for Europe, but on the long term, when you come out the other side, it'll be a stronger project. How can so many different currencies what is my best opinion? No, macroeconomics. How can so many different cultures agree? This is one of the problems. Sorry, I'll just answer Boyke because he jumped in there first. This is one of the issues which is brought up by many of the analysts who are kind of on the Eurosceptic point of view. Say, how can so many different cultures agree? It is a risk, but I think one thing that you've seen over the past 3 years since the crisis started, there is a lot of Euro harmony. There is a lot of Euro harmony within Europe. I mean, I'm from the UK. I live in Barcelona. It's a very international city. There's lots of people coming through. There's no, from what I've sensed, being here as an outsider, there's not resentment in the south towards the northern countries. I think that people genuinely believe in the project, and if people want to get along, they will get along. That's essentially the bottom line. America does not contemplate letting the USD go away. The same reasons. I mean, yeah, I think I agree with that. In this message, in this webinar, I'd like to reiterate that I've been quite skeptical of the factors leading up to the Euro's formation and the purpose it serves. It does not mean that I don't agree with it in a sense, and I don't think it has a future. I'm not here as a doomsayer saying everything is going to collapse. I think if you look back when this is archived, you can see that I've said that I think that as long as people believe in it, it will stay there. I've tried to keep my opinion out of it as best as possible, but from what I can see, people want it, people believe in the project, and as long as that is the bottom line, then I think it will go from strength to strength. Once you hit the bottom, the only way is up, as they say. What about all the debts is everyone owes everyone else billions? Yeah, this is, again, we only have a few minutes left here, so this is maybe something which I can maybe do another webinar on after looking into it. It's a bit of a Pandora's box to kind of get into now. Okay, guys, I think it's about time I wrapped up. I want to say thank you to all of you for joining and listening to me, first of all, and for your comments and questions. I've really enjoyed it. And if I could just give you one takeaway, my main aim to here is not to give you a definitive answer. This is not. I happily welcome, like we've had Fernando here disagreeing with me. My main aim is to get you to think, because when you open the newspaper and you see Europe Japanification, Europe crisis, Euro is going to collapse, I want you to kind of think about the points I've given you here, and then to kind of build that back into your investment profile. When you go out and trade, don't listen to the flashy headlines telling you that the world is going to end. Just look for the normalcy bias. This is my one takeaway. Okay, guys, I'm going to wrap up. But thank you very much. Take care.